Biggest trading mistakes, breach of market environment. The first biggest trading mistakes is the breach of market patterns. The second biggest trading mistakes is the devaluation of support and resistance level. The third biggest trading mistake, which we also call the forbidden trading mistakes, is the breach of the top-down or multiple time frame trading methods. In this tutorial, we want to talk about the breach of market environment, which is the fourth biggest trading mistakes. Let's get started. All right. If one wants to sow a seed, one must sow the seed in the right season. All right. So one cannot sow any season. There are seasons where a farmer will sow, and there are also seasons where a farmer will harvest. The same rules applies to traders. We must buy in the most viable market environment, and we must sell also in the most viable market environment. The fourth biggest trading mistakes is a trading mistake that trader must do everything to avoid, all right? Especially if you are new trader. What we have noticed, talking about the learning curve, let me talk quickly about learning curve. Well, we have seen traders start trading fast, okay? They go horizontal, and then the next thing, they are going down, okay? They are not making any profit, they are just losing consistently, all right? And then traders, slowly but gradually, they start improving, all right? They start improving, and that improvement is a kind of consolidation, if you want to put it like this. A trader will make profit this week and will give it back the next week, and they don't know what to do. But they know that they can trade, and they start understanding the market, and they know that they can start making profit in these messy markets. But the challenge that traders are facing, a lot of traders, to move from that stage to the next level, they must now start paying attention to the market environment. So a trader is following the market patterns. A trader is acknowledging the support and the resistance level. A trader is trying to use a top-down trading method, but that trader is forgetting to pay attention to the market pattern. This is to pay attention to the market environment. To correct myself, a trader now is not paying attention to the market environment. What do I mean by market environment? If we are talking about the market environment, the first thing that should come into our mind are the economy news and the market sentiment. The economy news will create a market sentiment, all right? And this sentiment and the economy news, will determine, the reaction in the markets. Therefore, for instance, if I identify a bullish trade setup, all right, and it's a valid bullish trade setup in a bullish zone, all right, on the edge, the risk is low, it's a bullish trade setup, all right, and I want to trade it, Now, I use a top-down trading method correctly, and I place the trade. But the next thing, the trade has failed. I want to know why that trade has failed. Because I did not violate the market pattern, I follow the rules and apply a top-down trading method, and I enter the trade on the edge. Everything technically done properly. But in that case, 9 out of 10 is the market environment, or the economy news, or the fundamentals can change the dynamics of the market. So remember what I said to you about the farmers. We want to sow at the right season. Sometimes we may see the best trading signal, the best trading setup, and we may follow the correct rules and place the trade. But if we are entering the trade at the wrong time, at the wrong time, at the wrong place, and in a wrong market environment, in a most useless market environment, we are likely to get into trouble. It's not because we do not know how to trade. It's not because we did not apply the trading strategy correctly, but it's just because we have ignored the market environment. It's like somebody, as I said to trade 100 times, want to organize a nice barbecue with his friend, and but did not bother to check the weather. So he set up everything in the garden, but he didn't check the weather. As the friend arrived, here it is, the heavy rain start following. The barbecue normally should be in a garden, in open space, when there's a beautiful sunshine, and one can enjoy oneself, okay, in that environment. The same rules apply when we want to buy. We want the market environment to be a little bit bullish, condition to be right, so we may, okay, be bullish. The same rules apply when the market sentiment, the market environment is bearish. We want to sell. Okay, we want to have bearish sentiment in the market, and we can sell happily ever after, so to speak. All right, it makes sense? You get a picture now, okay? Without too much blah, blah, blah from my side, I want to give you one specific example that we have had recently. This is the euro-dollar currency pair on the weekly chart, okay? So we know that previously the long-term trend is bearish, okay? We see we did not violate, so in that case we give priority to bearish signal on the edge. We use a top-down trading method, okay, to enter the trade, and we pay attention to the market environment. Now the current market pattern is horizontal. We don't want to violate the first rule, which is the breach of market pattern. We acknowledge that the current market pattern is horizontal. The price also oscillating between two levels. In that case, we concentrate on the medium-term trend, and we align the medium-term trend and the short-term trend to trade it on the edge. We give priority to bearish signal on top of the consolidation and priority to bearish signal below in the consolidation zone. Again, we will apply top-down trading method in each case because we know about the forbidden biggest trading mistake, which is the breach of the top-down trading method. Okay? So apart from that, suppose we ignore the economy news. Okay? So the current market pattern for the euro is this, okay, horizontal. But what is happening currently now? So I want to show you the time so you may know when I'm talking to you. Today, the time has changed now. It's midnight 13 in London. So it's now we are now the 2nd of December 2015. All right, even if you're watching this video 100 years later, all right, just understand today is the 2nd of December 2015, all right? And the time in London is 14 minutes past midnight, okay? All right, it makes sense? But what has happened recently, my friend, the current market environment, if we are trading the euro, all right? So we know that there was a terrorist attack in France where they have killed people in bars. France is part of the Eurozone, so that news is it positive or negative? All right, the market environment, okay? The next thing that we also know is that Turkey, which is a member of the NATO, has shot one of the Russia plane. It is good news, bullish news, or bearish news. What is the market environment? Okay, the market environment. Now, again, I want to show you something here. We go to www.forexfactory.com, and today is, as you can see, Wednesday, December 2nd, 2015. All right, it makes sense. So this is Wednesday starting at midnight in London, and you can see that we have some economy news that are due today. And each economy news, here we have the orange envelope, which means it's not very volatile, it's not too volatile, and the red envelopes are telling us that these are a high impact economy news. So if we are using a technical trading method, applying the top-down trading method, aligning our strategy with the market patterns, we are paying attention to the support and resistance level without devaluing the support and resistance level. We apply the top-down trading method. The next thing that we must check is what? The economy news. The economy news. As I show you now, on this day of December 2nd, 2015, this economy news will be released at each time. We want to know when these economy news are due, because when economy news are due, the market pause. So you may see that the price may be consolidating, waiting for that high impact economy news to be released. Once the news is out of the way, the market is paying attention to the next economy news sometime. The market will be also paying attention to the economy news that are due 2 days, even 1 week ahead. They are looking into the future. Talking about market paying attention to the economy news that are due in the future, I want to show you one concrete example. So today is the 2nd of December 2015, and the following day, which is Thursday, the 3rd of December, there's one economy news that is bordering the market. Which one? Here it is. This one here, okay, ECB conference at 8:30 a.m. Eastern Time. That's 1:30 p.m. London time on Thursday. Though today is Wednesday, the 2nd of December 2015, the market is expecting this economy news. The discussion is about the European Central Bank, which we call ECB, is about to devalue the euro more quantitative easing in the eurozone, meaning that bearish sentiment relating to the euro currency. So when we are trading the euro dollar, we must know that the current market sentiment towards the euro is bearish. The fourth biggest trading mistake is the market environment. I would like to encourage traders to pay attention to the economy news, know when the economy news are due, especially during the first week of the month when we have many high impact economy news, especially on the first Wednesday of the month and also on the first Friday of the month. But apart from these high impact economy news that are scattered all over the month, we want to know when they are due, which impact they will have on the market, and how the market is interpreting, okay, the forecast. So if you look on this chart here, we have the first data here. This is the actual figure, the previous figures, and then they will put here the forecast figure. And the market will be interpreting the forecast figure, waiting for the actual figure when the news is due. All this combined together will create a specific market environment. It makes sense? It makes sense? All right? Talking about the euro dollar, as I show you now, the balanced market pattern. But the market environment towards the euro itself is bearish. The market continues to sell the euro, waiting for that economy news. As we apply the technical trading methods, we are aligning our day trading strategy, swing trading strategy, with the market pattern, with the key support and resistance level, and the top-down trading method. One must not forget the market environment. Talking about market environment, we are talking about economy news and the market sentiments. One can check the economy news at Google Finance, at Yahoo Finance, and also at Forex Factory. Apart from these economy news that are released through these website, we can check what is happening currently in the world. Okay, we know that the Turkey warplane have downed one Russia plane recently, and also there were terrorist attacks in Paris. So pay attention to the general economy, the general news that we watch on televisions, what is happening in the market, and try to interpret how that news can affect a specific financial instrument. Professionals will always pay attention to the market environment when they are about to buy or sell a financial instrument. I have not yet finished. I want to talk about what we call the trading triangle. Check the video, Trading Triangle, by George Trio YouTube channel. In that video, I reveal to traders what we call the trading triangle. When professionals are trading, they use what we call the trading triangle. The first thing that one is trading first the market. And the market is represented by the S&P 500. So you are trading stocks. If the S&P 500 is bearish, just think of it that the market environment is bearish. So you will ignore bullish trade setup. If you are trading stock that American stock, in general, you will give priority to bearish signal. On the other hand, if the market, which is at the top here, is bullish, you give priority to bullish signal. Apart from the market itself, there are things that we call market leaders. For instance, if you are looking at NASDAQ 100, the two market leaders are Apple and Google. So the market leaders, if they are bearish, they will influence the market itself. If they are bullish, they will influence the market because they are market leaders. There are things that we also call market indicators, which can also influence the market itself. So we are paying attention to the market. We also know that market leaders and market indicators can influence the market. So these are indicators that we are watching to monitor also the market environment. Bullish market, we want to concentrate on bullish strategy, bullish financial instrument, aligning our strategy with the current market environment. The market is bearish, we give priority to our bearish trade setup, and we concentrate on bearish trading strategies. This is the best way forward, combining the technical analysis and the market environment. Remember what I said to say to you at the beginning of this video, you want to sow at the right season. There's a season to sow and there's a season to harvest. All right? Especially for swing traders. So you want to swing trade, which traders find a bit easy. They think that if I buy and I leave it there for days, everything is okay. It's not always like this, my friend, okay? Especially if you are a swing trader. You want to pay attention to the trading triangle, the market first, the sector, before the individual financial instrument that you are trading. But very often, traders will only concentrate on the financial instrument that they are trading. They will ignore the market and they will ignore the sector to which the financial instrument belongs to. Apart from that, they will forget the heart of the trading triangle, the market leaders, the economy news, and the fundamentals. If you want to know a little bit, just a bit about fundamental analysis, go to stochasticmarket.com, click on finance, click on fundamentals, click on financial to know how you can perform at least Google Assist tests for a financial instrument that you want to swing trade, position trade, or invest. There are seasons where traders are selling. You see, from 2007 to 2009 was a bearish season. It's a season to sell. And then from 2009 up to now, the market was going up. It's a bullish season. Very, very important. Do not consistently repeat the fourth biggest trading mistake, which is the breach of market environment. This topic is quite big, and slowly but gradually we will expand it so traders may understand everything. But for the purpose of this series of video, talking about the 7 biggest trading mistakes, the 4th biggest trading mistake is the breach of market environments. A lot of new traders very often will disregard this topic, which myself have done before, but I encourage traders slowly but gradually get back in line and start adopting the mindset of professional traders and do not violate the market environments. If you like this video, please give us the thumbs up. If you dislike it, we want to know that you dislike it. Give us the thumbs down. If you love it, all right, feel free to share it on Google+, on Twitter, and also on Facebook. If you love our videos, all right, hit the subscribe button. Stay tuned, because we will be recording more videos explaining to traders, what they need to know. And if you have any question, do not hesitate to put in the comment section. And in due course, we will record another video to answer your specific question. We are the TSTW24 traders, talking about biggest trading mistake, number 4, breach of market environment. Until the next time, enjoy yourself and be very happy. Speak to you soon.